Good evening, everybody. Hope everybody's having a nice summer evening. All right, tonight we've got the good pleasure of having Micah Lamar here with us. He is a expert stock and option trader specializing in cycles, and he kind of specializes in swing trading in Apple and Google. And again, anytime you can put something in place that's going to put the probabilities in your favor is a definite plus to your trading. So with that, Micah, welcome to the Candlestick Forum. We're anxious to see your information.
Great, Stephen. Thank you for the wonderful introduction. How's everybody doing tonight? Very cool. So tonight we're going to go over how to use Apple and Google's natural cycles to increase swing trade probability. And Stephen really nailed it when he said we want to talk about increasing our probability by using what I call probability stacking, basically using multiple indicators, multiple triggers that kind of all line up together to increase our probability of success on our trading. Okay? So just a real quick disclaimer, Wall Street IO is not a registered broker-dealer or investment advisor either with the U.S. Securities Exchange Commission or with any state securities regulatory authority. Users basically bear sole responsibility. You guys are responsible for your own investment decisions. We're not a trade advisory service. We're an educational platform. But with that, here's what you're going to learn tonight from tonight's presentation. We're going to talk about the number one trigger that I use for entering swing trades in Apple and Google. Lately, it's worked really good for the last month in Apple. Previously, for the last year or so, it's actually worked really well in Google and Tesla as well. So there's a note here that they say they can't see the slideshow. Is everybody else good on the slides? Can you guys see the slide deck? Okay, cool. Great, awesome. Thank you, everybody. The next thing we're going to cover are the 7 steps that I use to managing your trades and protecting your profits. These are 7 things that I developed over the years, my community and I, to really, again, help us use something that we call probability stacking so that we can increase the probability of our success in our trades. Okay, we're going to talk about how to use probability stacking, basically boosting up the probability of success in your trades. We're going to talk also about where Apple's going from here and how we use, again, that probability stacking approach with our indicators and seasonality to trade Apple. Okay. So first, who's Micah Lamar? Obviously, you all hear my voice on the other side of the screen, but I'm a husband, CEO of Wall Street IO, formerly Apple Trader. You may have heard of Apple Trader before. We got really big as far as Apple trading. We were one of the largest communities of Apple traders, and I kind of spearheaded that whole community a few years ago. I'm an expert stock and options trader, and I'm a mentor, and I'm a coach. Am I going to use charts? Yeah, I'll post up some really good charts as well, some examples. I've got lots of case studies here for you. Okay, so this is me. This is my Facebook page. You can see me right here. The reason I like to post up this shot here is you can see this view here is of Santa Barbara Harbor. A couple of years ago, my wife and I created the big goal to buy a piece of land in Santa Barbara, build our dream house, and we've just bought that land. This is a shot from our property, and I'm using the techniques basically that I'm going to teach you tonight to fund the building of this house. So it's a pretty big deal. We're really excited about it, and I thought I would share that with everybody real quickly. So let's go ahead and get started. So real quick, I just want to kind of get a sense of where everybody is. A lot of times when people are coming into the trading market, they kind of land in 3 different camps. They're either making big wins and they also have big losses. They're overall kind of flat. They have slow grinding losses, kind of frustrating. This is what leads a lot of people to kind of give up in the stock market, or you're making consistent wins and you have a growing account, which is always really sweet. Now, when people come into Wall Street IO, we generally like to survey them to kind of get an overall sense of where people are as a trader when they come into our community. We found that about 35% of our community, when they come in, they have big wins, they have big losses, they're kind of in camp 1. About 40% of the people, actually, the majority of people that first come into our community actually have slow grinding losses, and I can totally get this is really frustrating for people. And about a quarter of the people that come in have consistent wins and a growing account. So our goal, of course, is to get everybody into that third camp where you're making consistent wins, you're having a growing account. Okay? So my promise to you from tonight's presentation is that we're going to make you a better trader no matter what camp you're in right now. Okay? So to do this, we need to take it in chunks. I've got a lot of stuff that I'm going to be covering tonight. So if I start talking really fast, we're just got to keep rolling because I got a lot of content to cover. So we're going to take it in chunks. The first thing we're going to look at are the signals, and then we're going to look at some case studies of some trades. Okay? So firstly, what is the number one swing trade trigger for Apple? What's the number one swing trade trigger for Apple? For us, we use payday cycle reversals, and I'm going to talk specifically about what payday cycles are. Payday cycles are a 6 to 12 day directional trend in a stock, and we found that a lot of times Apple, Google, and a lot of these other big tech stocks will go through natural cycles, and so we want to try and catch the natural cycles, what we call payday cycles. Now, with Apple, one of the stocks that I trade almost exclusively lately, it tends to cycle a couple times a month. So where most people work a day job, they get paid twice a month. We like to trade Apple. We get paid twice a month, so naturally payday cycle kind of seemed to fit pretty good. Okay, so how do we find payday cycles? First thing we're going to use is we're going to use the Heikin-Ashi chart. I know Stephen kind of covered that a little bit earlier. It sounds like he uses a lot of candlestick charts. We like to use candlestick charts as well, but sometimes we also like to use Heikin-Ashi charts. Okay, so this is a normal candlestick chart of Apple. It's an 11-month time snap that I took, and the reason I grabbed this one was because it showed Apple in both downtrend, sideways trend, and an uptrend here, kind of a rounded bottom in Apple. Okay, so this is a regular candlestick chart. This is the Heikin-Ashi chart. For me, I'm a super visual person, and I like to visually see the trend, and sometimes by using the Heikin-Ashi chart, it helps me visually see. You can kind of see that it smooths out the trend quite a lot in the stock. Okay, so I just kind of zoomed in a little bit. We've got a 6-month daily chart of Apple using the Heikin-Ashi chart, and you can see again that the stock naturally cycles up and down, and one of the main points here is we want to make sure that when people are getting into aggressively long trades or buying calls or stock or whatever trade that you like to use for getting long, you're doing it when the natural cycles are basically in your favor versus trying to get long during what I call a bearish payday cycle. And I'm going to go through many examples here for you as well tonight, okay? So let's kind of zoom in a little bit on the 6-month time snap. But first, a little bit of a trader fact, something that I've come across a lot and we've kind of developed as a community. Swing traders a lot of times will make the most amount of money when they enter at these, what I call payday cycle reversal points, but generally reversal points. And of course, you could limit the risk, maximize the reward. Now, that may sound really cliche. A lot of people, of course, you always want to limit the risk. You always want to maximize the reward. I'm going to show you in just a second how I like to do that in my trading. And again, where are the best trades located? We like to say that they're located at the reversal points. Okay. Now let's zoom in to see if we can find those reversals. And to do that, I've outlined 7 specific steps that I use to cover these reversal points to make it a little bit easier, kind of a formulative approach to finding these reversal points. Okay, so I've kind of outlined them into 7 steps. The first one with Apple and Google and Tesla has actually been working really well with this is when Apple's been cycling down and we continue to make new lower lows, it's generally a sign that Apple is in a bearish trend, right? So one of the first things that I look for in a reversal is I like to look for a failure to make a new daily low, or said another way, I like to look for a higher low. So again, that doesn't guarantee that Apple's going to revert, but it's absolutely one of the first things that I like to look for. Okay. Now the second thing I like to look for is when a stock forms what I call a reversal candle. Okay. Now in this example, I have the bottoming tail candle here. In other examples, it could be a bullish engulfing candle. There's several different types of reversal candles. Some of the main ones again are bottoming tails, bullish hammers, bullish engulfing candles. I'm guessing a lot of you kind of know what those are already. So that's the step 2. That's step 2 that I look for inside of these 7 steps is I look for a reversal candle. Now, you may be asking yourself in this example, well, we did make a new lower low, right? So how does that work with step 1? So here's the next thing we need to understand is step 1 and 2 are kind of interchangeable. They can often happen on the same day, and sometimes instead of getting a new higher low, we see a reversal candle like you just saw. So those 2 steps kind of work together Sometimes they happen on the same day, and sometimes you get either step 1 or either step 2. Okay? All right, the next thing that I like to look for, and this is when I kind of flip my chart back to a Heikin-Ashi chart, is I like to look for the first green bar of the Heikin-Ashi. Now, visually, it makes sense that that would be the signal that we're probably coming to an end of this downtrend, and we're starting a new potential uptrend. Now, sometimes Apple cycles really, really well, where we get 4 to 8 days down, and then we go 4 to 8 days up, and it cycles really well. Sometimes we see a little bit of chop. During those choppy times, we have specific indicators that kind of tell us to watch out, because you do have to watch out for those choppy trends. Now, again, for step 3 here, we look for the first green bar on the Heikin-Ashi chart. And I like to use the MACD. I know a lot of people like to use the stochastics or the MACD. I'm a personal fan of the MACD. I like to look for when we get the first green bar here on the MACD, basically when it's rolling up, and at the same time we get this nice green bar here on the Heikin-Ashi. And that's going to kind of take us to step 4, which is this green bar here on the MACD. Now again, this can actually happen on a lot of times on the same day. So similar to step 1 and 2, where we have either a failure to make a new low or a reversal candle, can often be interexchangeable, with step 3 and 4 can also kind of work interexchangeable, okay? So sometimes they can happen on the same day, like in this example here, where we actually had the MACD and the Heikin-Ashi kind of giving the same signal there, okay? Step 5 is something that I like to use for a momentum signal on these big stocks that like to cycle a lot. I like to use the 5 and the 13 DEMA as a crossover signal. And the DEMA is basically a double exponential moving average. You may be familiar with the EMA, which is an exponential moving average, maybe the 8 EMA. I like to use the 5 and 13 DEMA, and when they cross, it often gives a really good directional signal. You can see in this example here that when they crossed here to the downside, the faster moving 5 DEMA is going to move a little bit faster, and when it crosses over the slower moving 13, sometimes you can get a really nice reversal signal, right? And again, you can see it right here, it crossed back to the upside. Now, on the next one, right, we have step 6. Step 6 is when we get the second green bar on the Heikin-Ashi chart, and it moves above the first one. Now, when I trade Apple, I like to use about 15 cents. So the second green bar on the Heikin-Ashi chart needs to move above the first one by about 15 cents. Otherwise, it doesn't really, for me, count as a reversal. And sometimes you get the second green bar and it doesn't even go at all above the first one. That's definitely not a reversal point. Okay? It says 20 cents here. I've been using 15 cents a little bit more often. With something like Google, it's a lot more expensive. 15 to 20 cents really won't cut it. So you have to use about $1. With more expensive stocks, of course, they're going to be a little bit, they're going to move a little bit more. So you have to use a little bit more of a range for that second green Heikin-Ashi. Okay? Step 5 and 6 again are often interexchangeable, and they can happen on the same day. So when I talked earlier about probability stacking and kind of stacking up these indicators all in a row, it's a really powerful signal for me when Apple goes through this formula, right? When we have either a high or low on the daily, or we form a reversal candle, and then we get these green Heikin-Ashi bars, and at the same time the MACD is rolling up, and at the same time the DEMAs are starting to cross to the bulls. It's a really powerful signal for me because it tells me that all of these signals are kind of lining up together, and for me that's a higher probability trade setup. Okay? All right, so the last step, 7, this is oftentimes one of the last things to happen, and again, that's why it's step 7, is when the MACD lines actually cross to the bulls, we generally see a much larger cycle. Now, the MACD is a really important indicator for me as far as my swing trading goes and as far as my longer-term cash flow trades go, because I kind of like to do both right now in Apple. Lately, I've been doing a lot of cash flow trades, buying longer-term calls and selling shorter-term calls against them. I'm essentially using these same 7 steps to manage those cash flow trades, and when the timing is right, I also will do something a little bit more aggressive, buying straight calls or doing a bull call spread or something like that to get a little bit more aggressive with it. But one of the things I definitely like to look for is the MACD lines crossing to the bulls. But again, this is generally something that happens a little bit later in the cycle, and when it happens earlier in the cycle, it's usually an even better confirmation signal. Okay, so we're going to kind of keep moving through these different signals, and I'm going to give you a few examples here. Okay, so you can use these 7 steps to kind of manage your positions. You could also use them to protect your profits, because if you're, let's say you're long a bunch of leaps for Apple, and the MACD lines cross the bear, Heikin-Ashis are going bearish, and maybe even we're moving into a seasonally slow time for Apple, like June is. I'll cover seasonality in a moment. You can start to use these to manage your positions. You can start to sell calls, upside calls against your leaps, hedge yourself a little bit. So I like to use these 7 signals to adjust my trading and kind of give me a little bit of a gauge for when I should be more aggressive or when I should be a little bit less aggressive in my trading. Okay. Now we're going to come back to this 6-month daily chart of Apple, right? So each one of these little candlesticks represents a 1 day. And again, this is the Heikin-Ashi chart. This is a Thinkorswim chart. We're actually working on a Heikin-Ashi solution over on our website, but probably won't be up for another month or so. But you can see that it definitely smooths out the trend for us. It makes it a little bit easier to see, for me at least visually, what direction the stock is going. Okay. So when we look at, again, those signals, during this 6-month time snap, we had 9 triggers, right? We had this nice upcycle here. We had a nice cycle here, this little teeny one here, and then you can see the other upcycles that we had. And again, I wanted to take a time snap of not just a very bullish time or a very bearish time, because naturally we get more cycles, but a little bit of everything here so that you can kind of get a little bit of the, just look into the chat room, so you can get a little bit of the, cycling up and down. James, I got you here, misstep 3 or 4. I got you here, James, misstep 3 or 4. We are going to, we're going to have the replay available for everybody, I'm sure, later tonight or tomorrow, so you'll be able to definitely get that going. Patrick, you can get the recording. Okay, perfect, yeah. So again, we're going to go over a lot of stuff. We're just getting started here, so we'll have the replay available so everybody can grab those steps again, okay? So again, in these 6 months here, we have 9 bullish triggers over these 6 months, right? Now, 7 out of 9 of those trades were pretty big winners. That's about 77% batting average. It's a pretty good batting average, with 7 out of those 9 trades being pretty big. One of the ones that was a pretty bad trade was this one here. Again, you can see it kind of dropped back down, but then entered into a really big one here. Now, I think a lot of people tend to overtrade, and for those who don't have a specific system, and I know Stephen does a great job here teaching that, but for people who don't have a good system, I think a lot of people tend to, especially in the early stages of trading, tend to kind of shoot from the hip. They want to get in and out all the time. They want to have a lot of trades going. And for me, I think I take it a little bit slower. Maybe I'm more conservative. I don't know. But for me, the payday cycle, it happens a few times a month, and I generally base a lot of my trades and adjustments around those. So when I ask the question, do a lot of people overtrade? I think with Apple, a lot of people do. Okay, a lot of people do overtrade because they're always feeling like they need to be in and out of a trade and making money. But for me, I'd prefer to be a little bit more patient, wait for the higher probability setup on those payday cycles so I can get in. And it gives me a little bit more peace of mind because I know I'm using something that's proven, it's got a lot of probability behind it, and I have a lot of experience behind it. So I do think a lot of people overtrade, but nonetheless, when you find a good system and you can apply it across multiple stocks, then you can be trading a little bit more. But with Apple, right, you've got a few times a month, you get a good payday cycle. Okay, somebody says that there's no cursor error, so when you say here, they don't see it. Okay, I gotcha. You need to use the pointer on the chart for showing example. I'm not sure where that pointer is, but I'm going to keep rocking here. Okay, so I want to cover a case study of one of the trades that I got into using this method. Okay, now this was a combination of the signals, the 7 signals I just showed you in a January gap analysis. Okay, so I'm kind of an options geek, and I'm a data geek, and so I like to look for probabilities, and I like to look at a lot of historical data. I like to look and see if I can crunch the data so that I can see if I find any correlations. Now, for the gap analysis, I wanted to specifically look at any patterns in Apple stock's behavior before, during, and after the earnings call. So to accomplish this, I looked at the last 6 years of data, and I made a note basically of where Apple opened each year. Then I combined that with where Apple closed the day of its January earnings, and then I looked to see if it gapped up or down. I was actually quite surprised by the data that I found, and basically I wanted to see how Apple traded 3 days after earnings and then 30 days after that to see if I can find any significant correlations. And I think you're going to be really interested in what I found here, okay? So this was a quick little example. Basically, I was looking for where Apple started the year, where Apple was when it had its earnings, whether it gapped up or down, where it was 3 days after earnings, and where it was 30 days after that. So those are the specific data points that I collected, okay? So here's a quick little thing, basically a case study of one of the years, right? We did it for 6 years, but I'm just going to show you one in respect for time. Okay, so Apple opened the year, this again is way back in 2009 at 12/27. Between the first day of the year and when it announced its earnings, it actually went down. And what I found was, when I went through a lot of the data, I'll go through the bullets in a second, but I found that Apple generally goes down between the first of the year and when it announces its January earnings, which again helps us adjust our trades accordingly. Okay. I'm going to go through the data points here. I know this font might be kind of small for you. So 4 out of the last 6 years, Apple traded down between the first of the year and January earnings. So far this year, 2015, the pattern basically has been holding true. So that's important information for anybody who's holding stock, holding leaps, even holding short-term calls, because if you know that the statistics are saying that Apple's probably going to go down between the first of the year and when it announces its January earnings, you need to either hedge yourself, sell your short-term calls, buy some puts, do something to protect yourself, okay? I also found that 4 of the last 6 years, Apple had a gap up on January earnings. The last 2, coincidentally, that gap down were 2013 and 2014. And of the 4 years that Apple gapped up, 3 of the times you would have made money if you bought 3 days after earnings and sold 30 days after that. Both times the stock had a gap down on earnings, the stock was much lower 30 days later. So basically, the conclusion I came to as far as these stats was that if Apple gapped up, it had a high probability of continuing. If it gapped down, then it had a high probability of not moving up, basically. So 5 out of the last 6 years, Apple traded down 3 days after the earnings gap. And so when it did gap up, I found it interesting that if you waited a few days and bought at the end of the day on the 3rd day, you actually got a better entry point. I'm going to cover that again in a second. I also found that 4 of the last 6 years, Apple traded up 30 days after the 3-day mark, which is basically the 3-day rule, buying it 3 days after earnings and kind of giving it a day to digest a little bit. Okay, so we're going to kind of use this data here in this trade. So basically, Apple had a pretty bearish day before earnings, but then it gapped up. And I knew, because I did this data crunching about a week before January earnings, so I knew that when it gapped up, it had a really good probability of continuing in that direction. And I used some of those other signals that we talked about earlier. This isn't a Heikin-Ashi chart because I wanted to show the gap, but there's clearly a green bar on the Heikin-Ashi. The DEMAs that you see here were bullish. They're crossed to the bulls. They're moving to the upside. The MACD was crossed to the bulls. The MACD was moving to the upside. So I kind of had all of these signals, the technical signals, but also the data and stats kind of in my back pocket to help me along this trade, okay? So on this specific case study, I entered into a bull call spread, which is one of my favorite trades for more aggressive trades, okay? So I entered into a March 1st 124 by 130 bull call spread, and I only paid $79 a contract for it, and it was a 6-point spread, okay? There's been a few questions that come through here. I want to keep jamming, so I want to... we'll cover all of your cues at the end, all the questions near the end. We'll make sure to get those answered for everybody. But feel free, when the questions come up in your head, go ahead and type them into the chat room now so that you don't forget. I'll go through the chat room at the end to make sure I get them all answered, okay? All right, so I sold that bull call spread for about $295 a contract. It was about a 275% gain, a really nice gain through this big run. Okay, how did I get this level to, I think it was $128. I used a Fibonacci extension. as well as natural payday cycles. If I know that in January, the bullish payday cycles tend to last about 6 or 7 days, I know that when I'm in a bullish payday cycle in Apple in January and I hit that 6th or 7th day in a row that we've done up, I probably want to be taking a little bit of profits because, again, the probability for me is more in tune with people taking profits on that 6th, 7th, or 8th day. Okay. Otherwise, you can also, trail your stops up or something like that. Somebody says the sound keeps cutting on and off. I do apologize for the sound on that. I use, for the MACD, I use just the default settings. Yeah, TOS has the DEMAs, the double exponential moving averages. I use the 5 and 13. Okay? You'll find they also work really well on Google too. Steve, thank you for the heads up. Jim, I got you here. Sarah, sounds good. Okay, perfect. Cheryl, sounds okay, great. Keith, appreciate it. Really, really great. You guys have a great community here. I appreciate all the feedback. Okay, so let's take a look at that spread specifically, because it wasn't that I just picked some random calls to buy. I had this very specific way that I like to use these out-of-the-money bull call spreads to really accelerate my profits, and they're not just shooting from the hip. I actually have a calculation that I use around them, so I want to show everybody that right now, okay? So, again, here's a risk graph that I use in TOS. I like to use the risk graph a lot because it helps me, again, visually see, and I'm a very visual person, so when I look at the risk graph, again, it helps me visually see, and I think that's probably why I like the Heiken-Ashi candles as well. So with this risk graph, you can see I highlighted with a red rectangle here what my risk was in the trade, only $79 a contract, okay? And then I highlighted with green what my profit was. Of course, this is profit at expiration. It's rare on these kinds of trades to reach max profit unless you let it run all the way to expiration, which I generally don't. But again, you can see the setup here. The setup here for the risk and reward is amazing, right? Look at this little bit of money that I'm risking for this huge reward potential. Again, Apple really has to rip for this to happen, though, because if it just goes sideways or it doesn't go up enough, the trade really won't work that well. It has to accelerate to the upside in a really, really strong bullish payday cycle to get these kinds of results. Okay, but you can see nonetheless how great the risk-reward setup is here and the reward setup here. Okay. All right, so it was a 6-point spread. Both the risk and reward, of course, equals $600. That's how spreads work when you do vertical spreads in the same expiration. So the risk was $79. The max potential reward was $521. Whenever you do a vertical spread, you add the risk and the reward together, and you basically get the size of the spread. Okay? Because it was a 6-point spread, there has to be $600 divided between the risk and the reward. That's just the law of vertical spreads. The risk and reward added together have to equal the size of the spread. Okay? Okay, so again, saying that is also a really important factor in how I calculate these, because I can do the math really quick in my head, but I know that if I do a 6-point spread, I'm paying $79 for it. I know that the difference there is $521. I can kind of do that math real quick again, but for anybody who's new to spread trading, you can again do the calculation by taking the size of the spread. Basically, it always needs to add up to the risk and the reward there. Okay. So again, risk 79, reward 521. Now, for anybody who's new to the risk graph, I don't want to step over that, so I'm going to do 10 seconds here, what a risk graph is, how it works, everything like that. Okay. You can see here on the left side, you have your profit and loss. This is in dollars. Okay. Somebody says to show the calculation again. Let's go back to that slide real quick. Okay. Here, 6-point spread. It's got to equal $600 because it's a 6-point spread. The risk is 79. The reward is 521. It's got to equal $600. Okay. Again, this will be available, I'm sure, for the replay. You got your profit and loss dollar-wise on the left here. So that's basically the y-axis. That's going to tell you how much money you're going to make or lose right here on the left. Okay. Now, on the bottom axis, you have the stock price. And then this red dashed line here, hopefully you can see that, as it goes left and right is basically the stock price going up and down. So when this red line moves right, it's because the stock price is going up. So you can see the stock price across the bottom here. Okay? All right, so the red line that you see here tells you your profit and loss on the expiration of the option spread, and this is how a lot of people show your risk graph. And I think it's a little misleading because it only tells you what's going to happen on the expiration of your spread or your option, and I think a lot of people don't hold to expiration. I don't think it's a good idea actually to hold all the way to expiration. So it's a little misleading when the risk graph only shows you that, and I think that's why Thinkorswim and other risk graph tools that show you dynamically more information is a little bit better. Okay, I'm going to show you that right here, this white line. This is really where the money is. You can see that here. So the white line, hopefully you can see, tells you your profit and loss today. This white line is going to change according to the passage, how time passes, how volatility changes, and how the stock price moves. So it's going to move dynamically, okay? So quick little risk graph. Again, coming back here, hopefully that makes a little bit more sense after we covered that risk graph, okay? So again, looking at the risk reward here, it had an amazing risk reward, setting up right from the get-go. So you can see when you start to think back at what I did here, I had a bunch of stats and numbers that I crunched, right? And I'm not saying that you have to go do that, but you know, this is something that I do, that I provide a lot of people. And then I went in and then I used those 7 steps that I covered earlier with the Heiken Ashes, the DEMAs, the MACD, and then I set up my option trade so that I already have the probability kind of stacked in my way as well, so that I'm limiting the risk in my trade and having a really big reward. So if all of that number crunching and all the data that I did and all those 7 steps don't work, well then I still have a very little bit of money that I'm actually risking on the trade. Okay? Now, I've had a lot of people ask me why this trade accelerates so quickly in profits, and one of the reasons is because it is an out-of-the-money bull call spread. Another reason is because one of the things that I know is that when Apple payday cycles, again, on a long payday cycle, it's only going to last 12 to 14 days, I think, on the longest. I mean, in the last couple of years, I can't think of one time we've gone over 14 days. So knowing that Apple in the very, very, very max will only go 14 days in a row, there's no reason for me to go 3 months out with my spread or 6 months out with my spread. Okay, I like to go 2 or 3 or 4 weeks out with my spread, and what that gives me, it gives me the ability to gain gamma. And again, I hope I'm not geeking out on options too much here, but gamma is an accelerator that's going to have me really, really accelerate. So again, the reason it accelerates is because of gamma. Okay, gamma is the accelerator. Let me show you a quick example of that. So here's gamma. Here's a short-term spread. You can see this white line actually has a curve to it. I call this the S-curve because you have a little bit of risk, you have a lot of potential reward, and as the stock price moves up, your profits actually start to accelerate. So every dollar incrementally the stock goes up, you're making more and more and more money every incremental dollar. Okay? And again, this is a spread just a few weeks out. Here's a spread when you go 3 months out. You can see the white line is very linear. It's going to act more like stock. So if you want to be in a trade for 3 months, you should probably do a spread that's 4 or 5 or 6 months out. But if you know that you only are going to be in the trade for 5 to 10 days, and you know that when it accelerates 10 or 15 points or something like that, then I think it's a little bit better to, use shorter term trades. Okay? The white line here is a very linear line, again, that shows you that there's no gamma. Somebody says, Helen says, great visual, thank you. Awesome, Helen, thank you for the feedback. Okay, again, gamma, curve, no gamma, no curve, okay? All right, so one thing that I really want to let everybody know to watch out for is this thing coming up here. And the reason I say this is because I want to make sure that when people hear this presentation, oh my gosh, 275% in 2 weeks, I'm going to go out and do all these bull call spreads. Well, it takes a lot of timing to get that kind of reward, but more importantly, you have to know when not to do this trade, right? That kind of trade setup may only set up once a month, maybe twice a month, and a lot of times it doesn't set up, so you have to know when not to do the trade again. So something you have to watch out for is this, compression. Apple compression mode makes swing trading really tricky, and I highlighted that for you in this red box. Okay, you can see before this compression, great payday cycles. I mean, look how nice those are. Presenting really great opportunities a couple times a month to get into a nice directional payday cycle in Apple. Nasty compression for a couple months, and then boom, into a nice payday cycle again. Okay, so what can we do to avoid these kinds of compressions? Or said another way, how can we take advantage of those compressions? Okay, one thing is for sure, when we're in compression mode, you absolutely do not want to do an out-of-the-money bull call spread thinking that the stock is going to continue to rip, because you're going to lose your dough. What you want to do is either stay out, or you want to do a more neutral trade, or if we enter into a compression phase of your long stock, well, maybe that's a good time to sell some covered calls. If you're long leaps, maybe do a calendar, sell some out-of-the-money calls, collect some cash flow. The thing is, naturally, Apple goes through compression cycles. I mean, it's natural for all stocks to go through compression cycles. We can't use the same strategy every week. A lot of times we have to kind of fine-tune that strategy, or what I like to think of it, and you probably heard this before, but you've got all these tools in your toolbox, and depending upon what that stock is doing, you could reach in your toolbox, pull out the appropriate tool to use for that appropriate situation. Okay, calendars, butterflies, Bud Ferris, I got you. Iron condors, Len Mack, iron condors for you too. Exactly. You want to be doing those more neutral trades. And this isn't in my slide deck, but I will say this real quick just as a little bonus. When you're doing more neutral trades, a lot of times, you're selling options essentially. One thing you have to be careful for, especially with Apple, is that you want to be short options that are guaranteed to expire before earnings. You probably don't want to be doing iron condors or butterflies or anything like that, and having those short options be expiring after earnings. Because what's going to happen is, as we get into earnings season, a few weeks before earnings, volatility is going to start rising a lot on those options expiring directly after earnings. And if you're short those options, you're going to get worked. But if you're short the options expiring before earnings, volatility will get sucked out of them. Right? Like right now, I know I'm going a little off track here, but right now I'm short a lot of Apple options expiring before January earnings, and I'm long August options because I'm going to get all that nice rise in implied volatility from August Apple options. I'm shorting the options that are expiring before earnings because I know volatility will continue to decrease, time premium is on my side, all of those good things. Good question here. This is coming up next, Jono. I got you. How do you decide when the compression is for real? Okay, good question. Right, here we go. Again, one of the reasons I really like using the MACD. So when Apple is in an uptrend, like it's been in the last couple of years, I like to use the MACD as a signal for compression. Right? So again, when we have a really beautiful payday cycle like we had here, Heiken Ashes are green, the demons are crossed to the bulls, MACDs roll into the upside, we're continuing to make new higher highs, everything's lined up, and then boom, look at that crossover, really nasty there in the MACD. Crossed over, and then it kind of goes sideways down for a couple months. During this MACD crossover here, it basically is a warning signal for me to, one, get out of any kind of short-term aggressive trades like the out-of-the-money bull call spread I talked about earlier. Two, if I'm long leaps or stock, sell some calls, make some money, do a sideways trade, right, like an iron condor, like you guys and girls were posting about in a second. Maybe some bear call verticals like Len Mack is posting about here, right? But definitely when the MACD crosses over here, it generally can take a month or two or sometimes more to kind of get back into shape, and that's one of the first signals that I look for compression in Apple. And you can better believe that when the MACDs cross the bears and it's trending down, there's no way I'm going to get into a short-term bullish directional bull call spread out of the money, because I just feel like the probability is so stacked against me in that case. Again, why I said you have to watch out for these things. I don't want everyone going out there and placing these out-of-the-money bull call spreads small on Apple, right? Because you have to kind of watch all these moving parts together and make sure that, like Phil says here, that the compression is over, right, before you do that. And I think I even have a couple more examples. Okay, this is perfect. So you can see here, Apple was doing nice cycles, went into this nasty compression phase, nasty for directional traders, great, that big red bar. You see the MACD crossed over here. I went and grabbed that exact time snap starting here and here. It's bearish payday cycle, but mostly just a compression mode, right? Until the MACD kind of curled back around and started to go back up. Ian says, Mike, I've got to leave, unfortunately. Thanks for enlightening the webinar. I look forward to seeing the completion. All right. Don't forget to send the link, Bill. Volatility crash on your directional after earnings. Yeah, so you have to be careful on vol crash on any directional trades after earnings, absolutely. What is Apple at right now? We're going to cover Apple right now in a second, okay? ZT, I got your post there. All right, so basically when you start to compound everything I've just showed you, right, the MACD, the DMAs, the Heikin-Ashis, the bull call spreads, risk graph, all of those things as well as the data points that we like to collect, comes down to Wall Street out. It helps you stay on top of your game. The main point here, if I could do one thing, it'd be to keep people from getting long Apple during bearish payday cycles, right? Because a lot of people come into, especially when the thing that I help people with is to not get aggressively long short-term calls during bearish payday cycles. So we'll do a little bonus here. Now, you may think to yourself, a zero principal risk trade, how does that even work? Is it even possible? Okay, so real quickly, let's go over that. And I want to be conscious of everybody's time, so I'm going to kind of start jamming through these. So basically, at the same time when I got into that January bull call spread, I used the 3-day rule, and I got into some January 130 calls 3 days after earnings. Okay, and so I paid $395 a pop for those January 130. I'm sorry, it was in January, but I bought the July 130s. Okay, I paid a little under $400 for them. After Apple went up, I sold the July 140s, right, because I originally bought the 130s. After Apple went up, rather than taking profits on the July 130s, I went ahead and I sold the July 140s, but I got $425 a contract for them. Can you see the math real quick right there? I bought the July 130s for $395. I sold the July 140s for $425. So I was actually able to bring in a larger credit than my original debit on that trade. Okay, and basically what that means is by selling the July 140s for more than I paid for the July 130s, I entered into a trade basically that hedged my principal, which was my original risk, 107%. Okay, so here's the risk graph for the original call. That was $395. Here's the risk graph after I hedged it. The risk graph bumped up above the zero line, meaning there's no way that I could possibly lose $1 of my risk. The worst that could happen is I was going to make about 7% on the trade. The best that was going to happen is I was going to make a couple 100%. So pretty good deal, right? And I think that's called smart trading. I like hedging. I like adjusting. I like making sure my principal's covered. Okay. Now, where does Apple go from here? This is the big question, right? So here's a little bit of data that, again, I love collecting data. Apple actually went down this specific week. Okay, and where did Apple go? The first couple days of the week, it went down. Of course, we had some pretty interesting action over the last couple days, but nonetheless, Worldwide Developer Conference performance this specific week was very bearish. So we knew this going into this week, so we can kind of prepare. June is actually one of the most bearish months of the year for Apple going back 10 years. Now, last year was a little bit of a wild card because Apple had a stock split. It was an event-based run where it was very bullish in June and July. You can also see that Apple is a lot of times very bullish in July. So guess what I'm going to be waiting for in July? I'm going to be waiting for some really great bullish opportunities in July because I know that that is oftentimes one of the best performing months of the year for Apple. Phil says they're trying to find wallstreetio.com. It's actually WALLST.io. We're going to post a link up here for everybody in just a minute, okay? So, again, where's Apple going from here? Well, here's seasonality, right? You can see that if it continues to act this way, we're going to have a really great July, probably a nice fall. They got a new product, right? So we like to look at the product launches as well. But nonetheless, I think that June, historically, you have to be a little bit more cautious. Worldwide Developer Week, you have to be a little bit more cautious, right? So as far as where Apple goes from here, I'm going to be watching seasonality. I'm going to be watching how well the Apple Watch performs, and if any numbers come out around that. I'm going to be watching for the MACD, the Heikin-Ashi, and the DIMAs to perform. So if I get some high probability setups, that's what I'm going to be looking for. Now, knowing that June is a more bearish month of the year, and knowing that the Worldwide Developers Conference this specific week is a very bearish time, we kind of knew that going into it. Again, using it to eliminate bad trades, we know that we don't want to get into aggressively crazy bullish trades over this time. So simply by using the process of elimination, we can immediately start to kind of boost that probability. So in the beginning of the webinar, I talked a lot about probability stacking. So I hope that throughout this presentation, you've been kind of hearing that as a background context, that it's never just this one little thing that has me get into a trade or a trade idea. It's using a variety of signals that I found work really well in combination. By using them together, we're able to create something called probability stacking, basically stacking that probability in your favor by using multiple tools and indicators. Okay? So I told you earlier that I would show you a little bit about how to find more information. If you want more information on payday cycles and what we do, here's how you find more information, Wall Street I/O. Okay, we have something called Wall Street I/O Premium Access. I'm going to kind of talk about that just for a second. Yeah, Helen says, good info. I thought the Worldwide Developers Conference was positive, or could be, right? Exactly how a lot of people think, right? So it's good to have the actual data. So Premium Access is $297 a month. What you're going to get with that, if you want more information on what we do, you're going to get the stock training program that we offer. I developed, I wrote, and I filmed this training myself. We go through technical analysis, trading systems, Heikin-Ashi, payday cycles, all of those things. Each video that you see here is essentially its own little module that you get with the stock trading program. Now, if you're already an advanced trader, you'll probably skip through the first half. If you know nothing about trading, this is perfect because it really takes you from knowing nothing to becoming an advanced technical analyst. Okay? Next thing here is the stock trading program. Again, when we first launched it, we were selling that for about $400 a pop. The next thing here, and this is my favorite part, is the Option Genius program. Again, I wrote this program. I filmed it. It's all on our site. It goes from knowing nothing about option trading to advanced delta hedging spreads, any kind of spread that you want to do. We pretty much cover all of them, but not only that, but how the spreads actually work together and how, I'm always a believer that when you may not use the butterfly, you may not use the broken wing butterfly, you may not even do a double diagonal, but knowing how those trades work, knowing how those components work, will only make you a smarter trader. So I do think everybody should go through that program in its entirety. Okay. Again, this is the Option Genius program. The second thing here is the Wall Street I/O social network. We hired some amazing developers that work on our team, and we built a social network for stock traders from scratch. We built it because we knew that there are features that we wanted in the site and our community that we couldn't just go out there and get with some template. So we literally built this website from scratch. We've got a great team of developers that work with us on this. So basically, here's the Wall Street I/O social network. Okay, the way it's broken down is on the left side, you see the trending stocks. Anytime somebody posts a new post here in the activity feed and they tag a stock, it flashes here red for everybody. So we kind of use that idea of this flashing stock thing in the design of our site. It's pretty cool. Okay. The next thing here are the expert feeds myself, and I actually have a few other experts that I've hired to help our community because as it's grown, I can't basically help everybody myself, so we have multiple experts. They all kind of have their own field, right? Andy is one of our experts. He focuses on Elliott Wave. Wave. Jake Pelly runs the portfolio growth, which I'll talk about in a second. He's more of an income trader. Okay, and then we have the group feeds. We have a covered call group, a Friday to Monday strategy group for everybody who likes to do that. Portfolio growth feed with Jake Pelly. Jake Pelly, which is included for everybody on the site, and he's a really great income trader. And so if you ever have any interest around trading for a living or specifically income trading, he's definitely your go-to guy. Okay, so you also get your premium chat room. Looks like the image kind of overlaps the text there, but that's all right. And one of the things that I like to do is I write a payday cycle report every day for everybody. So every morning, within an hour or two of the market opening, because I'm on the West Coast, you get your payday cycle report delivered to your email, and here's basically what it covers. The bearish or bullish season payday cycle for the stock, what the stock is doing. I go over the specific indicators, bullish, bearish, the DEMAs, the MACD, and all that kind of stuff. I go over all of that stuff in the email every single day. I also tell you how I'm trading. Now, again, we're not a trade advisory service. We're an educational platform, but I do tell you exactly what I do with my money when I do it. So if you do kind of want to watch and see how it all goes, you can definitely do that, okay? So we also have 3 premium meetups. I host 2 of them. Jake hosts the one on Thursday, and actually Andy's going to start hosting one next week. So we'll have pretty much a meetup. We go about an hour each time, pretty much every day of the week for you, okay? Now, today's special offer for everybody, again, the text kind of got cut off here, but we're going to give everybody premium access, which is normally $297 a month. We're going to do it for only $97 a month as a special for Steven and his community. Okay, so this special offer doesn't go up. It doesn't go up in price. We're going to basically grandfather you in a pretty massive discount for Steven's Candlestick Farm community. Only $97. Okay. Now again, quick little. This is one of my favorite testimonials because when this guy came to our site, he was so devastated. He was trading Apple. He was buying leaps and calls, and he was suffering big time when Apple did its big drop from 700 to 400. And he came to our site completely devastated. We kind of got him back into shape. Here's his thing. He says, I'm a physician by training. I'm not a trader. He's a doctor. For the last 10 years, he's worked at educating himself about the stock market, investing, and trading. Micah's training has been the most enlightening series of videos and webcasts I've discovered over the last 10 years, and I've been through a lot of programs. I feel so fortunate I discovered Apple Trader and Micah. Again, this is when we were called Apple Trader. I think he was down a few $100,000 when he came, and I think he's up about $1 million right now. Again, we're doing it for only $97 instead of $297. The slides look a little funny here. But basically, quick little summary here. The discount that we're going to give you, we're not going to raise the price on you later. It's only $97 a month. You get access to our stock and option training program, the stock and option course, the weekly meetups that we have every Monday, Wednesday, and Thursday, and I think we're adding one more. You're going to get access to our premium chat room, all the stock feeds, expert feeds, and group feeds, the daily email report that I write personally. You're going to see all of our entire vault, basically, of meetup replays, and much more. We have, like I mentioned, a fantastic team of developers, and we're always making cool things for people. We've got a lot of great things in the pipeline. Okay, Phil asked, how many trades do I do a week? Again, I covered the payday cycle analysis. It generally payday cycles a few times a month. Okay, so it's not just saying, oh, I do exactly 2 trades a week. It's, well, when the payday cycle reverses, that's where I'm either going to make a trade or maybe stay out or adjust a trade. Right now, I have a core position in Apple, long those August calls, shorting calls that are going to expire before earnings, and right now I'm kind of in adjustment mode, kind of trying to cash flow those the best that I can, and I, again, tell people when I'm making those adjustments. Okay. You also get a 30-day money-back guarantee, so Phil has a question here. Do you do an introductory offer like $7 a month or something like that? We don't do an introductory offer like $7, but again, what we're doing is instead of $297, it's only $97 a month, so it's a pretty massive discount, and that price does not go up for you. We grandfather you in at that lower rate. But we do also give you a 30-day money-back guarantee. So if you check it out, for some reason it's not for you, just send our support an email. We'll just refund your money. We're really, really wanting to make sure that the right people join our community, and if it's not for you, then no problem at all. You got 30 days to try it out, okay? So Again, when you click this link that they just posted up here in the chat room, you're going to hit a page. It's going to go over a little bit more information about the offer, and you basically click this button, obviously the click here button. Then you're going to come to a page. You're going to create your username and password, put in your card details, and you're all set. Okay? Dell has a question. What minimum account size do you suggest? Well, that's a really good question, and I think it's going to be a little bit different for everybody here, right? We have a lot of people on our site who have potentially millions of dollars that they trade with. Other people who have 100,000, 120,000. If you want to do portfolio margin, you got to have, I think, at least 125,000. Now, in my example, in my case study, I think the spread was only $79. Now, again, that's just for one, contract, buying and selling one contract. But I don't think people should be in the thought process that you don't have to have $1 million to trade Apple. In my example, it was only $79. Now, a lot of times, most of my trades are probably going to be a little bit more than $79. That was a unique opportunity. But, I mean, you really don't have to have a massive account. Okay. Now, I do recommend, as you're learning this new stuff, I'd probably recommend that you do any new trades in your virtual account because it's important that you learn it, right? You want to begin with paper money so that when you're learning this, you're learning new strategies. Just like with music, you want to start with your do re mi's. You want to start in trading, I think, with virtual cash so that you can go through your do re mi's, get into the nice rhythm of the stock, and then start to put some real money on it. Now, generally, I add a little bit more information about Google in this. You can use a lot of those same 7 steps that we talked about earlier, specifically with Google as well. Okay. So the question about Apple and Google. Do you limit your advice to Apple and Google? No, actually, in my webinars that I do a couple times a week, our premium meetups, I usually talk about 15 to 20 stocks. And if you have a question, about a stock or a strategy, just post it up. I'm super transparent about answering all of them. If you have an interactive charting program included in your website, at the moment I don't. I don't want to drop too many hints, but we're working on some really cool stuff. Not necessarily an interactive charting program. Thinkorswim makes a good one. Yes, it's going to be recorded. I'm just going to kind of skim through the chat room, make sure I get everybody's question. Rudy, I got your question. Do you trade stocks that have a higher ATR? ATR, for everybody who doesn't know, is average true range. Basically, higher beta stocks that are going to move a little bit more. When the right trade approaches, sure. Just kind of going to flow through the things to make sure I get all of the questions. Do you trade the bearish cycles as well? Put spreads instead of call spreads. When the opportunity presents itself, but when Apple is in a really nice up channel, as it's been for the last couple of years, there's been a lot more opportunity to get long. So I'm more inclined to, either sell upside calls against some longer-term calls that I have while it's cycling down, than just flat-out buying puts. Now, sometimes I will do some put stuff, but as long as Apple continues to charge to the upside, I kind of want to have my bias that same direction. Okay, just making sure I don't miss anybody's questions. ZT asked about Apple right now, so I felt like I covered that pretty good. The higher ATR, I got that. Minimum account size, I got that. Was it recorded? Yep, it'll be recorded. Do you have a live trading floor? We have a live chat room. How long does your offer stand? It ends at the end of the weekend, so you got to sign up before the end of the weekend. Does this work for shorting Apple? Again, you have to make sure that everything's lining up, right? So a lot of the tools and techniques and strategies that people teach, or that I teach specifically, sure, they'll work in both environments. But again, when Apple is in a clearly defined up channel, and a lot of the indicators are kind of leaning to the bulls, you probably want to be leaning to the bulls yourself. Okay? Rudy says, thank you. No problem, Rudy. Happy to help. Don says, have you recognized why the 7 cents doesn't work on large volume stocks? You know, the 7 steps works on a lot of stocks, and one of the things that I found is that I'm a better specialist trader. I'm a better trader when I focus on just a few stocks. So what I would recommend is if you have a stock that you're curious about, I would take those steps that I gave you and do a little bit of back testing, right? So you got those steps, maybe pull up a 1-year chart and see how it works. And if you find a stock that has a really great correlation with those 7 steps, first of all, email me. Let me know about it. Second of all, try it out. But definitely back test it, and you'll find that it works great on some and not on others. What you want to be careful for are stocks that are really choppy, or stocks that have really, really long wicks, or that move up really, really fast and then compress for a while. So you have to find stocks that have great cycles, and that's really the key. Okay, making sure I get everybody's questions. So just keep them coming. I've got a few. More here. Jim Blum, excellent professional presentation, Micah. Thank you very much for that. I appreciate it. Alex says thank you. So does Rudy. Great presentation. Do you follow Kramer? Apple hold it, not trade it. Well, why not do both? Have your cake and eat it too. Apple presents so many great opportunities to trade it. Why not swing trade it and hold it? Right. So I'm more in the camp of both. Right. You can own stock or you can own leaps, and you can also make some cash flow in the meantime. Okay. Lisa, your move on Apple tomorrow. Great question. Again, right now I'm long those Augusts, short the Julys, not the July monthlies, because there's a little risk of Apple potentially moving its earnings, and I want to stay away from that. So I'm shorter term the July 2s. I think they expire in about 30 days. And until Apple really shows itself for a great cycle, I'll probably stay with a little bit more of a neutral strategy, collecting that cash flow using volatility and time as my advantage right now. Jeffrey says, please make sure we receive a link for the recording. Hopefully the echo. Oh no, I apologize if there was an echo there. Yep, the replay will definitely be available for everybody. Jay says, is your service Apple specific or does it include other stocks? Okay, so again, we started out as Apple Trader, and that's really where we kind of got a little famous with the Apple community specifically. As I said, I'm a specialist in Apple, and we've hired other experts to cover other stocks, right? And again, during our meetups, I do cover about 10 to 15, sometimes up to 20 different stocks. I usually start with a top-down look at the market. I cover the SPX, the Dow, the Russell, and the Qs. Then I move into Apple and some other individual issues, and then I start talking about stocks that people post up, questions, strategies, all that kind of good stuff. John says, thanks, Mike. Can we opt out anytime in the future? Yep. There's no contracts, right, for the service. If you want to stay on for 3 months, 9 months, 9 years, whatever you want, it's perfect. Okay. Thanks for your question, John. But it says I signed up, but it doesn't work. Make sure you get the right link. I think Becky posted it up there. I'm going to post it up again here. Let's see if I can get this to go for everybody. John says, thank you for that. What hours are you open? I came late. Well, I don't quite understand your question. Hours are we open? Our website's open 24 hours a day. You can watch the videos on demand, watch all the replays on demand at your own pace. Of course, being stock market related, there's going to be a lot more activity during the trading day. Yeah, Fridays have statistically been a little bit more down, but that's going back 5 to 10 years. Over the last couple months, it's kind of been a little messy with people. Today we had a really interesting day. I don't know if y'all were watching Apple intraday. We had this weird spike down, and then it bounced back up, and then kind of ended the day a little bit down. But overall, we had some cycle indicators that were trying to lean to the bulls, but still there were not necessarily everything lining up quite yet. Is the program for options only? No, it's for stock traders. Again, I like to leverage options, but you could absolutely use payday cycles for stocks or for managing stocks. Any chance of a physical get-together down the road? Possibly. Possibly. We have a pretty big community, so maybe a physical get-together. Amy says, can you please explain the payday cycle again for everybody who wasn't able? The payday cycle is going to be a long time for me to go over that again, Alex, but I appreciate your question. Or was that AB? We will have the replay up for everybody. Okay. All right. Well, I think that is just about a wrap. Someone says the website's loading. Just have a little patience for it. William, does the website provide all the charts and studies? Do you have to go elsewhere for that? Yes, you will need to have a charting package. TD Ameritrade gives it to you for free. I think you have to fund the account with a little bit of dough, but you don't have to trade it, but you do get all of those things for free. We're working on a new solution right now, but it may not be ready for another few weeks. For the $97 a month, do we get unlimited access to all the training? Yes, there is unlimited access to every option training. Basically, for the $97 a month, you get access to everything on our website. Okay, we don't hold anything back, right? And you get to watch those on demand at your own time. Is there a person live that we can call with questions about of the training? We have a great support team that you can email our support. Right, so if you have questions, you can email us our support, absolutely. SMS alerts, not yet, coming potentially later. And again, the special offer, giving everybody here a pretty massive discount, it's going to end Sunday at midnight. Okay, but I do recommend everybody go ahead and check it out, sign up, get access to the website tonight, tomorrow, start training, getting your option groove on. Thank you, Becky, for posting that link up again. Going to watch the recording. Thank you, Alex. Really, really appreciate it. Mimi says, can you please comment on the use of the 7 steps for buying stocks and not options? Well, I think a lot of it still applies, Mimi. You can use those steps for, if you didn't trade, there's a lot of people on our site that don't trade Apple options. They just use it for stock trading. I'm in Pacific time. Yes, Jace, I'm in California. All right. So very cool. I think we pretty much handled everybody's questions. Jim says this was a very organized presentation. I'm looking forward to working with you. Awesome, Jim. We'll really, really appreciate your feedback, and I look forward to seeing you, at our site. Cool. All right, Bud says, thank you. I look forward to working with you as well. Good job, Micah. From Jace, Alex. All right, very cool. Okay, well, I think that is just about a wrap. We pretty much covered all the questions. Again, the replay will be up for everybody. And if you want any, if you have any follow-up questions for me, you can jump over to our site and check it out. Again, everybody gets 30 days money-back guarantee, so there's really no reason not to at least try it out and get a good grip on some of our training that we make available. Rudy says, great presentation, Bob. I got you there. Thanks, Andy. Thanks, Micah. Okay, cool. Well, I think that's just about a wrap for everybody. The replay will be up soon. You'll be able to take better notes with that, go through my 7 steps and all that good stuff. And I think that's just about a wrap. So I think that's it.
Micah, thank you very much. Very good information.
Thank you,
everybody, if you're really serious about trading options, you're going to get much more than your money's worth using Micah's system. So take a look at it. Remember, anytime you can add information that's going to improve your perception of when to be in a trade and when not to be in a trade, you should do it. So take a look at it. Micah's got very good information. Micah, thank you very much.